All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about the aftermath of everything that happened yesterday. Of course, yesterday we had a pretty massive down day with the overall market going down about 3% or so. You can see this very bearish candle. So what I want to talk about today is I do believe today is very important. Today kind of decides, okay, what's going on? How are people feeling? Was this just some kind of dip in the market where we see a huge drop and then price is going to rebound off of that? Or are we in for more surprises and more downside? Me personally, in my opinion, I think this is going to be a little bit more bearish. And I'm not just saying that because, we, could potentially have a crash. No. What I see here is we see a big down day and we see a lot of stocks that they're not necessarily climbing hard today. They're not bullish engulfing candles by any means. And what a bullish engulfing candle is where there's a green day that fully encompasses the red day. Look, we had a very strong down day. And generally markets, they trend up slower than they fall. But a lot of stocks and a lot of ETFs today I find are having these wicks here, where if you look, it's like, this means that the price rose to a certain point today and the price has fallen and almost rejected off of that point. And that's a bearish candle. Now, is that for all stocks and all ETFs? No. So what I want to talk about in this video is what I see, as well go over some distributions. And this is really a key point within the market to kind of say, whoa, what's happening here? Are we going to potentially go further down or not? And we'll talk about that in this video. So if that does sound good, we're currently up to 6,647 subscribers. A lot of new subscribers recently, 465 subscribers in the past 28 days. Thank you to everyone who subscribed. Enjoyed the last video. It did fantastic, and that's all because of you. Thank you very much. All right. So kind of before we get started, I actually want to disclose that I just made a purchase. And my purchase was 60 more shares of YMAX at a share price of $17.44. Now, I'm uncertain where the market's going to go currently, right? Like if I had a crystal ball, I would tell you exactly where the market's going to go, but I don't. So what I did was using some of the cash in my margin account. If I go to my USD, I used 1,000 USD here and I bought 60 more shares of YMAX in my margin account. This brings my total YMAX shares to 80 shares at an average share price of $17.51. So the reason why I bought more YMAX today is because what's the market going to do? It's either going to go down or it's going to go up. With the recent down day in YMAX, it presents a pretty good opportunity, as well as the fact that it also went ex-dividend today as well. So it's kind of down on that as well. So I decided to buy a little bit more of YMAX, and it's not a huge investment. It's $1,000 investment. But when we look at the total cash in my investment and the total margin that I could potentially use, this is not a huge investment. If YMAX does go down, I will be buying more because I view YMAX as a long-term hold. I don't view it as something that I'm going to be short-term in and out. But one thing that I do want to mention is, although I bought YMAX, by no means am I buying more Square, which is SQY right here. Pardon me. Right here, I'm by no means buying more SQY. I'm not buying more Babo, and I'm not buying more PayPal, PYPY. And the reason for that is because YMAX is a long-term holding. I believe it's going to do better than it is doing today. Long-term, it's well diversified. It pays a fantastic and reasonably consistent dividend. But when we look at others like Square, Babo, and PYPY, they're individual stocks. They're a lot more volatile. And I'd rather put my money into something which I believe over time is going to appreciate, not certainly, but a lot more likely, in my opinion, it's going to appreciate and be a lot more stable than a lot of these riskier ETFs. And of course, I do have pretty decent sized positions in all of these. You can see I have 3,000 in Babo, about 1,000 in PYPY, and about 3,000 in SQY. And the reason I'm not buying more, even though that I'm down and they're decently attractive right now, is because I don't know where the market's going to go. The market could tank and these stocks could go down 20%. So that's not a risk that I want to take. What I would take is YMAX, for example. If YMAX goes down 20%, I'm going to buy it super heavy. But these other stocks, I don't need to take the risk right now. YMAX is something that I'm looking to hold for a very long time. So it's not one that I'm going to be jumping in and out of potentially. I'm going to buy it. And currently we're at an interesting spot because, as I mentioned, we had a big down day, and we don't have a huge update today. It's kind of just like testing the waters. It's a bit choppy, which is to be expected. Either the market was going to tank even more, it was going to be choppy, or it was going to go up. Those are our three options. And it's choppy. So right now, it's not super decisive where the market wants to go. It's showing that people are buying a little bit, but they're hesitant. Like myself, I bought a little of YMAX, but I'm still hesitant. So over the next few days, I'm going to keep a tight eye on the market and see. It's going to be very close. And ULTY is another one. I know you guys have mentioned ULTY in the comments and in the community. And ULTY is one that I'm not buying any more of. Absolutely not. And the reason being is you look at the overall trend. YMAX, when I look at the trend, it's fairly good. You know, it's down about 10% over the year, but it's risen in certain periods of time, and it's paid out a fantastic dividend. ULTY, although paying out a fantastic dividend, has fallen for the majority of its stock price history. Over the past year, down 55%. That's not something that I want to hold. I want to hold something that's a little bit more NAV stable. And maybe over the next couple of days, I'll actually make a video, because for the fund of funds for Yieldmax, they've introduced 2 new funds, FIVY and FEAT, FEAT. And I can kind of go over what those funds are doing and if I would potentially buy and which one I would buy, but I'll make that in another video. This video today is just to kind of show you, okay, what's going on in the market. It's choppy. We still need more days in order to determine what the market wants to do. But once again, I'm holding cash, and honestly, I would like to put even more cash in my portfolio. I have to work on that. I got to earn some more money, so we're going to do that, and we're going to continue to build cash because still uncertain where the market's going. So if this video hopefully kind of helped you out, I know it wasn't super decisive on which way the market's going to go, but we're in choppy waters. The best thing we can do, build cash. And if there is an ETF or a stock that you like, for example, mine was YMAX, I put a small portion in because sure, there was a little bit of a dip, a little bit of a buying opportunity, but we don't know if it's going to fall further or what's going to happen. So we'll just go from there. We're currently up to 6,647 subscribers. Thank you to everyone who subscribed. Give this video a like if you guys did enjoy and want more, and I'll catch you guys in the next video.